Hello, my name is Roy Phelps and I'm here today with Paul Arnold, tax partner at Bevan & Buckland Chartered Accountants. We are going to discuss one of the most generous tax reliefs available today, R&D tax relief. Paul is a national expert in this area, having previously headed the National R&D tax team at one of the big four accountancy firms. And he is a current member of HMRC's R&D Consultative Committee. Welcome, Paul.
Okay.
Paul, can you explain, please, what R&D tax relief is all about?
Okay. What it's ultimately aiming at doing is encouraging companies to undertake R&D. And the way the government does this is by providing a tax incentive. So if I kind of explain it by way of a numerical example, if you imagine you've got a company, and I'll use numbers being an accountant, but these are just for illustrative purposes. Let's assume a company's got turnover 500,000, cost of 300,000, so it makes a profit of 200k. It would have to pay tax of £40,000 HMRC at a rate of 20%. What R&D tax relief is all about is looking at that £300,000 of expenditure to see whether any relates to R&D. If it does relate to R&D, you not only get tax relief for what you've spent, but you also get a notional amount. So if you imagine you're an SME carrying out your own unfunded R&D, that rate is 125%. So if we looked at the £300,000 of expenditure and we were able to say £100,000 relates to R&D, taxable profits would go from 200,000 down to £75,000. So as opposed to the company having to write a cheque to HMRC for £40,000, it would only have to write a cheque for £15,000. So by simply identifying £100,000 of qualifying spend, that company will have £25,000 of extra cash. In addition, what the government has designed the scheme to do is if you're an SME carrying out your own unfunded R&D and you're in a loss-making position, there is a mechanism where that company can surrender its losses in return for a cash payment. So in essence, a company who spends 100k in R&D could potentially have a cheque from HMRC, what used to be £25,000, but from the 1st of April of 14 has now gone up to nigh on £33,000.
There is a different scheme for large companies, and this has recently undergone a significant change.
In terms of the numbers that I've spoken about, that's the scheme that would apply for SMEs. If a company would qualify as large, then there's a different regime. And as opposed to it being 125% enhanced tax deduction, it's only a 30% enhanced deduction. So spending 100k would mean you'd get an additional £30,000 of tax relief, and that would give you £6,000 less you'd have to pay to HMRC at 20%. Where the old rules have always been less advantageous for many companies is in the loss-making position, because whereas the SME scheme, there is a mechanism where you can say, right, okay, we're not making any money, so we've got to pay no tax, and we can surrender those losses for a cash payment. That's never been possible under the large company scheme. What, however, happened, there was a change from the 1st of April 2013. So now there is a mechanism where companies that are large can claim tax-free cash from the government. And that's approximately 8p in the pound to what they spend, subject to a pay-as-you-earn and NIC cap.
So tell me, Paul, what are the key points that companies take away from this change?
In terms of the change under the large company scheme, I guess they fall within two categories. The first of which is that the rate of relief has become more generous. So as opposed to getting 6p in the pound, which you previously got under the large company, that's gone up to 8p in the pound. And also now there is a mechanism for all companies to potentially claim cash. I think what's also important to note is that if you have a company that's an SME based on its size, but it's never previously claimed R&D tax relief, for example, because it's got grant funding and therefore it's precluded from claiming under the SME scheme, and it's always had the ability to claim under the large company scheme, what has previously been the case is a lot of companies said, well, I'm not making any money yet, I'm undertaking R&D, but all I've got is tax losses. Increasing those tax losses may not be worth me doing a claim. Those companies now have the ability to claim extra tax-free cash from the government.
The all-important question is exactly what is R&D?
Okay, I think the key point with R&D is it's the tax definition. And a lot of people have their perception of what is R&D, but there's a particular rule within HMRC where if a company satisfies the definition of R&D for tax purposes, then it would qualify under this regime. And what you tend to find is a lot of people are surprised at how generous the definition is. It can almost be thought of as a product and a process. So if you're a company and you're saying, right, okay, what we're trying to do is we're either trying to develop a new product or an improved product, or a new process or an improved process, then that can often lead to R&D. So if you're doing that and there's technical challenges, so you're not certain whether or not you're able to make those advancements, then that can often be sufficient for it to be R&D. And if you're doing something like that, it's always worth having a discussion with an expert whether or not you would qualify. So for example, one of the examples I frequently give is if you're a company and you make pasties and you want to take out the salt that's in the pasties, but you don't know how that will change the taste of the pasties, etc., and you have to do some research and development around that such that the taste doesn't change, that can often be an R&D activity. So making a pasty, which someone would think, well, that can't be R&D, can be R&D, provided it falls within the definition.
And what costs, therefore, can qualify for this?
There's a wide range. You'll tend to find the main ones are staffing costs. So that would be company employees, the salary, NIC, pension contributions. If the company is contracting out any work, that can qualify. You can also have agency staff, any consumables that are used in the R&D process, computer software, power, fuel and water. So there's a wide range of costs that can potentially qualify. I think the key part to any R&D claim is, I think if you speak to any accountant will know that staffing cost qualifies. Where the challenge comes is if you look at your employees, it's identifying who is actually undertaking a qualifying activity and getting that percentage as high as possible.
Now, this obviously is a very important subject for companies. So tell me, how do you assist companies?
Whenever I work putting an R&D claim together, I kind of have three key objectives. The first of which is to maximise the R&D claim, so making sure that the financial benefit the company is able to derive is as high as it possibly can be. Secondly, I make sure that the claim is as robust as possible to minimise the risk of HMRC asking any questions. So what I would do is when I'm putting an R&D claim together, there would be a supporting report, and that report will provide details of the R&D activities that a company's been undertaken. So I frequently write project descriptions, setting out what the activities are, what the technical challenges are, what the uncertainties are. And thirdly, I try and ensure that I minimise the work for the company's personnel, because you'll often find that companies are reluctant to spend too much time on this process. And because of the experience I've got, I can be very tailored in terms of the information I require from the companies.
If a company does think they may be doing some R&D, what should they do next?
In terms of doing an R&D claim, it would be worth speaking to an expert in this field. In terms of, from my perspective, I work with a large number of companies where I just purely do the R&D claim. So if you have a company that has an accountant and an established relationship and they're reluctant to move their accounts, their tax compliance, I do work with companies where I purely work on the R&D claim. I think what's important as well, in terms of to make an R&D claim, you have 2 years either to make a claim or to actually amend a claim. So if you've got a company thinking, well, I'm not doing any R&D at the moment, but I have been in the last few years, then it's still worth having those conversations, because there may be an ability to amend a tax return in order to claim this entitlement.
How complicated would you say this process is?
Any company should never really be put off thinking it's too onerous a task. It doesn't have to be. It can be a smooth process from the company's perspective, because, for example, the way I would work, I would take a lot of the work off the companies. So I would do the work and have a minimum input from the actual company's employees. I think what's a key point to note is to do an R&D claim is relatively straightforward. Where the challenge comes is actually maximising that to claim as much cash benefits for the company as possible.